Good, thanks
Yeah,
yourself.
yeah, struggling on. Don't mind me if I'm quiet because I'm about to go and make my tea in the kitchen, so I'll be listening but not watching.
Yeah, no, it's all good, mate. I'm gonna cover gold for Ellen anyway, and
Cool.
obviously if there's anything, mate, just chip in or whatever. But obviously busy,
Now,
busy.
I've been out the loop this week, but want to stay with my eyes on this stuff.
Yeah, yeah, no worries, mate. Um, right, so that's that. That's that. We are on. Um, right. So gold. I'll cover that. What I was just talking with you, Ellen, and then
Oh,
just.
this is where you'll buy with my cell. I go, I recognize that zone. I've seen that picture somewhere before. Oh yeah.
Yeah. Well, it's funny. It's funny. Obviously, I'll cover it properly in a minute. But this is actually your trend line, Matt. This is one that you pointed out.
I think I remember that one.
Yeah, so that's why it was of
Cool.
significance. And obviously structure-wise, it's the 15-minute low. The sweep is the new 15-minute low was obviously once all last week when it
Yeah.
carried on doing its thing. Um, so yeah, basically, just obviously just as a quick, what I was actually going to cover was I was going to go through like the whole process of a trade, and because I often say that obviously the market's doing usually one, if not two, of three things, which is create liquidity, take liquidity, and then rebalancing the market. So just as a quick overbrief, obviously it's created it here, it's taken it here, and then it's possibly rebalancing it here, and then obviously the little side thing to the three things it's doing is structure. So with the added of this is a 15 somewhere in here, if you pretty much the lowest imbalance, I believe. So basically, I'll just zoom in and explain because obviously Ellen said that there wasn't a 1 minute break to the upside. So I'll come on the five so I can fit more candles on the screen. So I don't think the five's changed it much, to be fair. Where the 1 minute actually was a bit of a guess, to be honest, because you'd have been sort of acceptable with that. I guess that this high here sort of meets the rules for 1 minute structure, but without doubt, obviously, it's broken above this high here, so it was never in question of whether it took the high or not. Obviously, it takes it quite far enough. We know it takes it anyway. It's irrelevant. We know it takes that high. Um, so yeah, this is what obviously, like I say, whether it's that one or that one, it don't really matter. But the point is, it's obviously it's created liquidity. It's taken it here with this push down here, and then obviously whether, like I say, whether the 1 minute high is there or way up here, it does both anyway before coming back. So when price came back on Friday, it was just a case of it had already done it on the last Thursday, so 8 days, 8 days before it actually come back. Um, or if it's that high, obviously it will be it did it on the Monday, midday Monday. So so yeah, five or 8 days. Obviously, if you count the weekends.
Alan, were you looking for your change of character on Friday's price action?
Yeah, I think that's what she was sort of
Yeah.
looking for. Yeah, yeah, yeah. So, but like this was sort of sorry. If you got something to say, Alan, just butt in. I'll shut up. Like,
Yeah, what I was expecting was the 15-minute structure. It's like bullish at the moment. So I was
yeah,
expecting it. When it was reversing on Friday, I
yeah,
was expecting like a 1 minute kind of break
yeah,
to the upside, kind of, I don't know, within that kind of
yeah, yeah,
um I don't know. Maybe I was looking for something that wasn't going to happen. I don't know because
Well,
I haven't got my head around it properly yet.
yeah.
Yeah,
Well,
I was
it,
expecting something down here to kind of
yeah. Well,
give
this
me a
this still
signal.
might happen this week because if obviously if structures to continue, so obviously I was anticipating. I thought this was going to be the start of the pullback, which was last
Yeah, okay.
Monday, but then
Yeah,
obviously it carried on. So
yeah.
I now think that obviously that this is it's not really a pullback. It will be like a lower time frame pullback, like a 1 minute sort of pullback, but
Mm,
not such a 15. Um, so I now think that this is possibly the structure, and obviously
yeah, that.
that's possibly the new 15-minute low. So
Okay,
I'm
yeah,
still
yeah.
maybe I would still say if price breaks above, I mean, because I had an alert on this as on the new 1 minute high as well. Because if it breaks the high, I'll probably try getting again. So
Is that
um,
your 1 minute high there? What you've that
it
green line?
yeah, it'll be this one now. So it was
Oh,
there
okay.
when it was hit
Yeah.
because I had another couple of imbalances that I was sort of interested in, and I wanted to see what happened at them. So
Mm.
I was sort of following it down as it was going, sort of thing. So
Oh, yeah,
it
yeah. Just
made
moving it as it
yeah,
went
it makes a
downward.
low makes
Mm.
yeah makes a little low here, pulls back, makes a new low, pulls back. So
Okay.
this high here is what I would probably want it to see broken before
Mm.
getting in again. So the 1 minute change may still or should still happen, hopefully. Um, so basically, if we get something like that, is it might attach something in this little.
That would be perfect, wouldn't it?
That would be perfect, yes. And then because obviously, if we look at the 15-minute structure, pretty much on all of these highs and lows, we do tend to see a 1 minute change. So
Mm.
I think I
Yeah.
posted this in the chats in the week. So because I think you were so close with this one. So
I went in just before yeah, when it was consolidating and then it went
yeah,
pushed up and then it reversed. So
yeah. So
yeah,
very,
and
very
I didn't get in when it kind of reversed. So
yeah.
hey
But
ho.
yeah, so very close because that would have been a beauty of a move
Mm,
as well.
mm,
Obviously, generally want advice to catch the sell in a bullish market because obviously we are bullish, but like with experience and well, just with experience, really, that's all trading is, I guess.
mm.
Like anticipated these, like I said, knowing that we was expecting a pullback at least because, like I said, I thought it was going to happen the day before, so I was highly anticipating a pullback, and then obviously if I'd have seen that, I won't focus it that day. I think that was in the night anyway, was it? Yeah, early hours. Could have still caught it there in the morning. But yeah, I was busy anyway. But if I'd have seen this going on, then that would have been music to my ears. I'd have been taking that all day long. Um, would have been a nice trade.
There. Did it break the 1 minute structure there and then just went up again or
Yeah, so I'll zoom in so we can. Not the easiest to read, to be fair. But basically, we get a push up from here, sort of somewhere down here. You've just got to pick a point, sort of. So it pushes up here, makes a high, pulls back. So one of the obviously the rule for structure is the lower is the in a bullish market, obviously. So it's bullish for all this. So
Mm,
let me just
yeah.
draw that first leg. So low puts in a high, pulls back. It's the lowest bit of price action from when prices that high is then retaken. So this is the lowest candle once this candle gets retaken. So it gets retaken maybe
Mm.
here or there. Just turn it colour. So obviously it makes a new high, and then again we're looking for the obviously the same rule again. We're then looking for the lowest. Obviously, if it doesn't take this low, because obviously that's the low that
Mm.
puts in this high.
Yeah.
So if it doesn't break it and it continues to the upside, because we're only looking for in structure, we're looking for the 2 points, which is the low and the high. So when this makes a high and it starts pulling back, once it retakes the high again, which it does over here, if we
You
ignore
mark that one.
yeah, so it's only when this has
Okay.
taken the high we would then go right. This is now the new low. So
Okay. Yeah. Yeah.
yeah, so and obviously that's the lowest point between this high being taken. So it's if I draw a line from that, nothing passes that line up until here. So when this candle goes above it, that's where we could go back and go right. This is the new low, and obviously
Mm.
it continues, and then it within hours, obviously it takes the low. That's the point. So if you was to say, just let me cancel that. So
So that's the point where you want to look for your entry
that's the point.
after that
Yes,
after that
exactly.
break.
So
Mm.
so effectively, if if you was looking for a sell on gold at the sort of like around this sort of area, right? So I would advise if you can, you would set an alert on these two lows because it's obviously pulled back. It's made a new high. If you're sort of watching it, you'd go right. I'm sticking a alert on this low. I'm going to stick an alert
Mm.
on the high. Let me just bar replay so we can sort of play it through as if we was live but quicker, obviously. So you've set an alert at the low, set an alert at the high because it starts to pull
Mm.
back. That's a current structure. Um, no, obviously no alerts would have gone off at this point. It's just we wouldn't even need to check our phone, basically.
Oh yeah.
Right.
Yeah.
So at that point, I'll just go back a candle. So at that point there, our high has been taken. So now we could comfortably come on the market, look at the chart, sorry. Right, so that was a previous leg. Look, what's the lowest point in price action before that high is taken, which obviously we're saying it's now. That's the lowest candle after this high. So anything this side of it doesn't matter. It's just from this high, anything between this candle and obviously this one being taken, it's the lowest candle, which is this one here.
Mm.
So again, we can then go right. We can move our alert to that low. This is tedious. I don't do this myself anymore. But when I was doing my 4:15 1, this is pretty much what I used to do because I used to draw me point of interest, which is a slightly higher time frame point of interest.
Yeah.
And then when it was getting to a point where I thought we're pretty much in the zone where I'm guaranteed, as long as it breaks structure, I'm guaranteed to be putting a trade on. So all of the confirmations
Mm.
was met. I just wanted the 1 minute break, so I would literally just keep my eye on it and keep moving me alert from the high and the low. And if whichever one went off, obviously I'd look at me when I got the alert through. I was then just following it. So when this price action here is difficult to keep an alert on though, because obviously the long. Ideally, we're looking for a bullish break to the downside, so bullish structure. So this is the important alarm for the last confirmation. So, but keeping an alert on the high, just you sort of have to keep your eye on the charts a bit because the alert might not. The alert's hard to set because it might make a high after this, and if you don't keep an eye on it, you don't know where. You don't know if it's going to make a new high and then a new low again, unless you keep your eye on it, if that makes sense. So,
Yeah.
but basically, if you can just check your screen every 30, 40 or an hour sort of thing, I guess.
Mm.
I don't know how long this
Mm.
takes, but if we play it from there. So, yeah, we've marked the new low after this alert would have gone off. We play it. Obviously, alert goes off at this point here. So,
Mm.
that is at that point, and alert would be at that point. And then at that point, because we've had the breaker structure to the downside. I'm expecting a 15-minute pullback because the 15-minute is way beyond the previous high that it made. So previous highs down here. Obviously, we're uptrending, pullback, takes the high, takes it by a massive amount. And then obviously, so we are well overdue a 15-minute pullback, in my opinion, at that point.
Yeah.
So, and then we've had a lovely 1-minute break to the downside. So that's sort of enough confirmations for me. There is obviously, I'm sure there's liquidity in here as well, which is also a good signal. So maybe something like that. If you're bothered by liquidity, it's always a good sign. Not the cleanest, but maybe something else. So liquidity here as well. So there's a couple like areas of liquidity, and obviously the previous 1-minute high is also liquidity. So I always say major highs and lows are liquidity as well. So all of these highs and lows that I draw on my structure, because I consider them external liquidity, because it's major structure points, I consider them liquidity. So basically that, but it's taken liquidity, it's broken to the downside. 15 minutes, we are expecting a pullback, so at least a decent amount of pips or dollars to the downside. So, and we've pretty much had all the confirmations I would be happy with. So at that point, it would just be a case of go and find an entry, like find an imbalance, because obviously I started the video off by saying obviously the market's doing usually doing one of three things. So it's creating liquidity, it's taking liquidity, obviously it's giving us a structure break, and then we're looking for it to rebalance itself. So at this point, we're just, all I'm basically saying is there's an imbalance in here somewhere that I want it to fill, and above the imbalance is an order block that creates the imbalance. So imbalance or FVG, depending on which chat you're in, same thing. Slightly different theory about what it actually is, I guess, but not really not the point. But the order block and an imbalance, they confirm each other. So what I mean by that is, without imbalance, there's no such thing as an order block. And without an order block, there's no such thing as an imbalance. So they've both got to be together, basically. Otherwise, one doesn't exist as such. Because otherwise, if there was no imbalance, it would just be balanced price action, and you won't be able to tell the difference. And same vice versa. Not too important, but if we're looking, I mean, you could really get down a rabbit hole and decide like whether you think it's actually trying to fill the imbalance or if it's trying to tap into the order block that created the imbalance, you know. So, and that's why my entry is always at the point in which the imbalance is filled, because it's usually at least trying to fill the imbalance. And then obviously if it goes a few pips or whatever extra into the order block, then I'm still in the trade, and my stop loss is usually a little bit on. Obviously, if it's a sell, a little bit above the order block that creates the imbalance plus spreads, and then I tend to round it up.
Sake.
You're right, mate. Yeah. So.
Oh, sorry. I'm driving. Sorry, I've gone the wrong way.
Well, be safe, mate.
Sorry, I thought I was on mute. Sorry.
It's all right, mate. It's all right. Adds a bit of interest to me, Zoom, to be fair. So yeah, basically, order is the imbalance being filled. That's me entry point. Obviously, on this occasion, the green box is the order block, and then, like I said, I just round it up, add a bit for spreads.
Okay. Yeah.
Pretty much away you go. And I also say is that the lower the time frame, the closer to real imbalance you will see. So I don't really believe in, say, 5-minute, 10-minute, 15-minute, 4-hour imbalances. They're just the two bigger time frames to actually see where the real imbalances are created. So, but obviously you can go down to lower time frame, because obviously once we get to like sometimes the 5 and the 1 second, we start seeing big huge gaps and things. So, but sometimes it shows clear as day. So, on this occasion, obviously it looks like a 1 second imbalance that's created. So, which we see here, this huge candle. Obviously, the order block wick high there. So that 1 second candle does pretty much a full dollar. It moves a full dollar in a second. Obviously, I just marked it from this candle low here to the creation. Obviously, it's a bit higher, but I've done from the imbalance. And if you see that sort of candle,
look at that baby. That's awesome, isn't it?
Yeah, that's 1 second of price action, and it even creates wick. So,
and that's probably most of a 1 minute candle as well, isn't it?
Yeah. So if
probably if you have them up, yeah,
it will be. Yeah.
That's what takes a while to get your head around sometimes. Yeah.
Yeah. Pretty much that one. I imagine it's that 1 minute low is what candle that's created. So the 1 second creates the 1 minute candle pretty much, and then everything else is sort of in between. But yeah, like if you're seeing that sort of candle on anything from the 15 and below, then as far as I'm concerned, that's because that would have cost to move the market that much in that, especially in obviously the time frame's sort of irrelevant. It doesn't really matter, but like I say, the lower the time frame, the closer to true price action you're sort of getting. So
you're looking to enter the market just above that long candle
where the imbalance is filled. So because obviously market's either taking liquidity, making it, or rebalancing the market. So because it's taken liquidity to the left, where we go. So yeah, it's made liquidity here, and there's a bit of a possibly across here as well. So it's not the cleanest, and Matt's going to pull me up on this, but
I'm not. You say that every week. Oh yeah, you'd say, "Oh Matt, you can't have that."
Yeah, I would. Yeah, yeah, I definitely would. I mean, to be fair,
that's all right. On a second, that's all right.
Yeah, it's generally close enough to be. If like, I mean, I'm dead picky with my trend lines, but to be honest, I'm sort of moving over to the fact that I would accept this, knowing that say the 15 minutes well overdue a pullback. So yeah,
I do think there's a little bit of slack in the market as well.
Yeah, well, there's a slight difference in feed. There's slippage. There's difference in feed, so that might be a perfect trend line on say forex.com. So you sometimes have to allow a little bit, I guess. But like I say, price is just. I was trying to sell gold the day before this, so when it had another huge rally in continuation, it was just a bigger confirmation that we was getting close to the time. We was getting closer to when gold needed to come back down a little bit before it maybe continues long again. So yeah, it was, and then obviously, like I say, we've had because we're expecting a 15-minute pullback. Like the 1 minute confirmation is the one I'm looking for. If I was looking for a 4-hour pullback, I'm expecting the 15-minute to break structure. So generally drop like, obviously I tend to mainly wait with the 4-hour, 15-minute, 1 minute. So structure wise, I'm looking for the time frame below as the confirmation that it's possibly going to turn around. And then obviously, from
the lower time frame first.
Yeah, because obviously on the 15-minute structure, the 1 minute's going to turn first, and on the 4-hour, the 15 minutes going to tell you first, because otherwise the lower structure could just continue up, and it will just continue up, you know. So, so yeah, that's that's about that. And then obviously, I'm not gonna Barry play all that 'cause it'll take forever. But obviously, knowing that I was trying to.
It's good.
Sorry, what was that? That went really robotic.
I just keep on marking my 1 minute wrong for some reason.
Right. Yeah.
I just need to practice, I suppose. But
yeah. You'll get there. Like it's structure's really hard to like learn. I think it's just like it's so important, but I mean, and there's only like 2 or 3 rules. I need to find them again because I keep forgetting them. I just go off like the obviously the bullish structure. Obviously, the lowest it pulls back to before the highest retaken is one of them. One of the other ones is it's got to be like a minimum of 3 or 4, minimum 3 or 4 candles of like, obviously in this pullback here before it makes a new high. Obviously, this is crappy price action to read, so it either needs to be a prolonged period of price action in the direction for me to class it as a valid sort of structural pullback, or sometimes it's real close and clean. It might happen in say 10 or 15 minutes. You might get a pullback, a new high, and then a break structure. Sometimes it happen really quick. In that case, I want to see several candles of the same color to class it as a sort of a valid structure. But sometimes you'll get one, sometimes you'll get price action like this where it pretty much looks sideways, and then you've just got you're just going off like say the lowest point it pulls back. That's pretty much about it for structure rules. But visually, it can be so difficult to learn, and you're almost always anticipating slightly because we work to the previous structural range. So as this is being formed and it makes new high, you're sort of anticipating that is the low before it's almost guaranteed it's the low. So there is a little bit of anticipation element to it. And obviously at that sort of point, you sort of want to have your eyes on it. So you could always add in like a POI to your left to go, well, if it hits this sort of area, and then I see what I want to see, start breaking below lows and things, then happy days. But yeah, it's hard to teach because although there's a couple of rules, visually everything's going to look completely different every single time it happens.
Yeah.
So it is difficult, but I believe it's so important. Obviously, I know Tom doesn't wait for a break of structure. He would possibly get in. Say if he was looking for this sell, he would have maybe seen this wick up, he would have seen it pushing away, and then he would just get in at some point. But he's only aiming for 1 to 3s or 4s, maybe 2s now. Whereas I'm looking for the market to sort of tell me that it actually wants to change direction first. So just keep at it. Just keep. Obviously, I keep posting them anyway. So every time I say post something, or even if it's not for a trade entry, even if it's just a structure, because I see people are looking at say setups, I'm going, look, you're not waiting for the 1 minute break or whatever, and then I draw a little zigzag. This is what I've got for me structured. Maybe just try and look at them and then just go on the chart and then just draw it out, and then maybe even just play the candles out and to see if you can, without any drawings on, but focus on, like say, that sort of area price action. See if you can figure it out as it's sort of playing out slowly, sort of thing. Go, oh yeah, that looks like it could be about to turn from that point, and before you know it, you'll be like, it's starting to make good sense,
Yeah, definitely.
Yeah, but yeah, just keep going with it. Like I believe it's major point. And then obviously I didn't take it, but if I was anticipating a buy from this zone here, like if you was brave enough to hold it that long,
maybe one day.
Yeah. So, but a lot of that, but that's. I mean, I'm not saying I'd be comfortable holding that. I don't think I'd have maybe took it that way because there was some imbalances slightly higher. I think I was maybe looking at this around here. So even if you took it to something like that. It's still a ridiculous sell anyway.
Yeah.
But yeah, like a lot of the comfort of maybe holding something like this is because I know structure.
Yeah, you're confident that it will go like that. It's going that way. So
Yeah,
yeah.
so structure would help, and obviously then I always say if you're back testing enough, and I mean because I see this move, so this structure obviously 15-minute trending bullish, we get a 1 minute break to downside, and it roughly targets what it's going to aim for. I've seen this hundreds, if not thousands, of times now. So if I know that something's roughly going to aim for because this pullback's a deep pullback, so I generally say anything around about the 50 is about a good pullback. So even if you only took it to 50% of the pullback, it's still a great trade. But yeah, it's so common to see. Just because of structure, I just know it's going to roughly when it's going to pull back, and it does tell us. We've just got to know what we're looking for that. So, but yeah, that
Cool.
would have been a great trade.
I think
Shane was busy.
Successful traders hold their trades because they know they can.
Yeah.
That's a big difference. Yeah. And you've got to have this kind of knowledge to know that to give yourself confidence to hold.
Yeah, definitely.
Rather than just going by multiple, it's like a different system entirely.
Well, I mean, it's mainly because of structure why I get in when I do, and obviously hold and things like that. But I'm only trying to take trades from what I consider these best areas as well. So patience really pays me because there'll be lots of setups, even in this last 15-minute bullish price action. I mean, everyone in the FEG chat would have maybe tried 6 trades in this. Every time there's a bit of a pullback, they'd have maybe tried getting in there, a bit of a pullback, try getting in off that, So I've waited for one, whereas everyone else might have taken 6 opportunities, and just because I'm anticipating. Obviously, I don't know what will happen over the weekend. This might still come lower for summer, but I'm sort of expecting a new 15-minute high due, and I do think
Trump has announced an EU-US trade deal, so there's a good chance gold is going to down.
Yeah, but there's a couple of imbalances I've got marked up here were bullish as far as I can sort of tell. We might get a new all-time high from there, but obviously remains to be seen, Peter, hey mate, just reading your message quick. Am I still doing higher POIs for this, mate, or just 15? I'm still doing higher, mate. I'm not really doing the 4-15-1 system anymore. But I'm using structure as a main sort of focal point as for areas where I would want to buy and sell from. Me reasons for POIs are still pretty much identical, mate. So obviously this one here, where it's sort of hit now, obviously we're on gold. Even if that wasn't me entry on Friday, I would still be looking at this sort of area because as a POI, and like I say, as I said earlier, it might still give the 1 minute break, so there's still maybe another chance to get in. I'd have been looking at sort of like this sort of area because obviously it takes liquidity. So areas that take liquidity and also take main highs. So there'd have been something in here. Maybe if we would have had other breaks to the upside, I'd have considered buying from up here as well because this down here causes this to be taken. So, but obviously it doesn't hit this area and break to the upside. So no confirmation, no trade. But yeah, areas that cause breaks of structure and take liquidity are the main reasons for looking for trades. But yeah, that's about gold. I'll look at something else. We covered Euro NZD last week as well, I believe. So it hit at market open, so which would have been my entry. So didn't get in, which is unfortunate. But again, it made a new 15-minute high. It's possibly taking it now, but I'll maybe consider another buy from somewhere in this if it. I mean, it might have already done it. To be fair, again. We might have had a 1-minute break from that. That is awful price action. Yeah, I don't like any of that, but I suppose if I had to pick somewhere, I suppose my 1-minute break would be that high there. Looked like it would have already mitigated it before it broke it, so maybe it's wrong, maybe it's not. Yeah, not to worry anyway. Do I look at the 1-minute structure on the 5-minute time frame? Yeah, the 5 and the 1, just because I can fit more on the screen, and I know roughly what I'm looking for is going to be about the same back. Like
And quite often the same, aren't they? I've noticed that recently.
Yeah, yeah. They're a close multiple together. So I think I've mentioned last week that obviously the 1 minute is like 15-fold away from the 15-minute, and then 16 and 15-fold on the 15-minute to the 4 hour is about, 15-fold-ish, 16. So the one and the 5 are only 5-fold away from each other. So I consider them about the same. But obviously the one will give you more.
That
The
tripped
one
me
will
up
give you
for a
more.
while.
Yeah, yeah.
Honestly, I find by the time I found a 1 minute that I think's okay, it's 5 minute anyway.
Yeah. So, yeah, I was the one or the 5. They're about the same structure. You're not really going to see much difference. So let's just have a quick gander at this because this has possibly taken the 15-minute low. Obviously, if it breaks this low, then I'm definitely saying we are turning bearish. I don't know why. I just feel like that might not be the 15-minute low. Got no confirmation for it, but we can maybe start to see. We can maybe start to look if obviously because if this is going to buy from say up in here, we can maybe look for liquidity that will show us if it's going to come lower than this, somewhere in this. So yeah, so we've got a decent trend line there. So build up liquidity here. So obviously we can sort of maybe start to think that obviously price will want to come and take this trend line. So from obviously when market opens, obviously it'll do whatever it wants to do. But let's say obviously setting a lit on this line, when it takes it, obviously we would anticipate we would watch it and see what happens from there. If it takes this low, because the sweep might draw it below this low, then I would say that the liquidity is forced the breaker structure, and then we maybe will get a pullback from that into some up here, maybe even in this, and then maybe continue of the 15 minutes to the downside. If obviously when it takes that liquidity, it doesn't take the low and it just, so there's a little bit of imbalance somewhere down low in that, but doesn't take it. All we've got to do then at that point is we would just want it to take the 1 minute high. So if we say that's the 1 minute high at the minute, then obviously 1 minute high broken there, we would then look for an imbalance. Can this push up to mitigate? And then obviously we could then maybe take the 1 minute high. So this is how we can use liquidity to maybe determine where we think price is going to go. So alls, whether you believe obviously liquidity is people's money, stop losses, orders, or whatever, it doesn't really matter. What is important is that the only sort of guarantee I can sort of tell you about liquidity is that price wants to go past it. So, and it's a high probability that we'll go past it at some point. So obviously we can spot it, then we can set alerts on the point in which the market is passing it, and then it's from that what happens after that, which is what will tell us whether we want to be buying or selling. So these are, like I say, these are a couple of the options. I'll change that color so we can do a couple of different options there. So there's also obviously the possibility that it will be a continuation to the downside, which is we might not get the breaker structure. We also might sweep, mitigate the high, retake the low, and then come back and mitigate up with that high, and then sell off. Not a huge fan of the continuation sort of stuff. They're not as natural to me as sort of like reversals. So
Found them really awkward. I haven't managed to. I've had a couple of reversals, but found continuation is really hard.
Yeah,
too variable. It's too much to.
Yeah, I find with continuations sort of setups that if it's going to pull back, so like obviously if we follow this orange line, obviously it takes liquidity. I think if you're going to take the continuation, you want this first pullback to be very deep into that structure leg, very, very deep. So it's pretty much got to be the last imbalance, because whereas often it will just pull back, say there, like halfway, and then there's possibly still imbalances higher up. I just find it easier if it pulls back really hard, and then you want obviously to continue in a direction, so it will then take the low again. Then you're finding an entry imbalance. So, but what could obviously difficult, because it could do that, and then it could just the next swing up could fill the highest imbalance and just go sort of thing. So, like I said, they're not as natural to me as, but they're an option. So I'm trying to cover a few angles here for everybody, because I don't expect everybody to, like, obviously that the gold trade that we looked over a little bit ago, everyone might not be interested in that sort of specific way. So cover a few things and people can pick up a couple of bits and they might go, yeah, that bit makes sense to me, that bit doesn't, I want to do that, I don't want to do that bit, and things like that. So yeah, there's nice little bit of liquidity, trendline liquidity, that. So maybe keep an eye on that in the week as well. We are bullish, so but like I say, we might be turning short term bearish. As we mitigated something that high there by looks of it. So yeah, I would anticipate buys from somewhere down just beyond that, but it's a guess. It's okay. I can guess all I like. It's confirmations and breaks of structure that actually count. So Should do anything with them. There you go. Put a link for that. Not a huge amount. Some decent imbalance on this. Yeah, I mean, this is a 15-minute low. I was on about it. I want it to break anyway. But there's some nice imbalances down there. So this, I imagine the sweep will come for fill one of them. And if it does, and then obviously gives a 1 minute break to the other side, then could be money. Not perfect. Well, maybe. Maybe. Um, Good chat. I'll be able to post my confirmations rules. Yeah, what I'll do, mate, is I'll post them tomorrow, mate. I'll do it tomorrow in the S&D chat. What I'll yeah, probably have to write them out again to be fair, mate, because the my trading plan's based around me old strategy. So although I bollock everyone about not having trading plans and that, I actually haven't got a valid one for now anyway. So yeah, but yeah, I'll get something written out, mate. And
Yeah, you do. It's in your head, Lee. You don't need it written down. That's all.
no, I waited on my other one and my old system like for long enough. I know how I'm trading now is it's all like I genuinely believe like the market's only doing making liquidity, taking liquidity, and rebalancing the market. So there's just a little process in that, so it's relatively simple. I don't need to write it down now because all me old confirmations and things, it's the same confirmations. It's just there's a slightly different approach to it. So I like to think of trades as almost like telling you a story. So obviously, if we get a decent pullback of the 15, it tells us the 1 minute breaks to the upside on this occasion. It fills an imbalance. The story now is just a bit of a shorter story, but all the stuff that made up the first trading plan is the same. It's just there's not as many confirmations, and I'll look at. Whereas before, I was mainly just trying to catch like, I'd wait for like 4 hour structures and things. Whereas now, because I'm even better now at reading the structure than I was before, I'm more than happy to take trades from different positions. But I know roughly. Well, I don't know because obviously no one knows, but I can sort of anticipate a bit better because I know if I get in at a certain point, if I get in late, I know it's not one that I should be holding, sort of thing. Because on let's say a pullback, if it's mid range to high or late in a 15-minute structure being made, I know that a good pullback is likely to take it out. So if I get in early, I'm more likely to hold it for longer.
Yeah.
If I get in the structure swing late, like you're getting out like that day sort of thing because you know the pullback's probably going to take you out. So I take more trade now than I did with my 415 one, but the basis is about the same. I'm just looking for imbalanced liquidity and sweeps and structure. So yeah, I'll spend an hour or two writing some stuff out for you, mate. But I will do it. So, is there any more questions, guys? Because if not, I'll probably call it about there.
I'm good, thank you, Lee.
Yeah. 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 Call it there. Oh, I'm sorry, I got a message. Yeah, no worries. Cheers, you lot. Thanks for jumping on as always.
Thanks, Lee. Cheers, mate.
Cheers, thank you.